Perspective about all of this. Find out where we might be headed in the final hour of trading.
For that, we welcome back our Fox panel with us. Eric, I saw you nodding when I mentioned European markets. Do traders look to Europe now for guidance?
No, but I want to touch on something Tracy said. She was talking to some traders on the floor, and they said they wished that had come out. The rate cut, what came out at 8:20 a.m. Eastern Time this morning, they had wished they had come out during trading hours. I totally disagree with them. I think, David, you hit it on the head. Europe was down until that rate cut was announced. Then they started to rally, and that really kind of put a floor in here. Europe couldn't have rallied this strongly without that rate cut, and we couldn't have helped. Look, we're down 80 now. We were at 1.600 Dow points lower this morning. It came at the right time. Boy, at the end of the day, if we end up around here, what a great move by the Fed. I was watching Paulson speak. Thank God the Fed moved when they did.
Peter, I know you don't feel that we need any kind of rate cut, but you had to anticipate it. So how did you play it with your clients' money? What do you do?
Well, I basically was talking to clients last night from my bedroom on the phone. I placed several orders in Australia, New Zealand. I bought a lot of stocks on the anticipation of a rate cut this morning. That's what I thought was going to happen. But it's not that we're going to have a recession. I'm not saying we don't need a rate cut because the economy isn't weak. The economy is much weaker than Bernanke is letting on. We just need to have higher interest rates and take our medicine. You know what Bernanke did today? He gave the market a stay of execution briefly, but it's not a full pardon. You know, I talked about the head and shoulders top back in December forming in the Dow. The pattern is now completed, and the projection is Dow 11,000 on that pattern alone. That's 1,000 points lower than we are right now, and we're going there.
Well, Victoria, is it that we need a recession and we need to squeeze inflation out of the economy, or perhaps it's that the Europeans need to cut their rates and thereby lifting the dollar a little bit?
Yeah, they've held their rates pretty high, certainly compared to the U.S. We never need a recession. Recession is not a good thing under any circumstance. What worries me now is, you know, this morning it looked like the markets were going to take a really ugly hit. And today was okay. And surprisingly, financials and home builders look like they were up. We don't know this yet, but looks like they were up for the day. And what I'm worried about is psychologically, do investors need an ugly day? Do valuations need to come down so that we can then get back into the market? A lot of us want to feel like we're calling the bottom, and that's never easy. No one can really do it.
But you know, unfortunately, the only cure for our disease is recession.
Gary Kaltbaum?
Look, I just want to point out that yesterday at the end of the show I talked about how down legs of a bear market end with 400 where we're down in the morning and we finish near flat on the day. It washes out all the panicky sellers, and then you get a move to the upside. Depending on how we finish today, we may get that today.
We're down just 67 right now. We're down just 67.
Right, I do think we ultimately go lower, but a day like today can end this leg of the bear, and we'll rally up maybe to 12.4, 12.5, and then we'll take a look from there.
You know, Eric, it may be that those folks who had counted on a recession in the past week are wrong. It could be, in fact, that the old scenario that Bernanke said of a serious slowdown but no recession is right.
It certainly feels like we had been in a recession in the last few months, especially if you've owned a home and if you've owned stock. So, okay, so these things have a tendency to work themselves out. The selling, the pressure, all that selling, it's a momentum play. Money is clearly coming out of all investment vehicles right now. What's it going to take for it to turn around? An absolute capitulation, which is what we had. We had a European capitulation. We capitulated this morning. If we end up around here, especially if we get anywhere near unchanged, and then Apple tonight comes out with blockbuster earnings, which I think they're going to, boy, I tell you, everyone who is short into this,
David,
if you were in any Apple store, Apple store, anytime over the last 2 months, you have to wait in line for 15 minutes just to pay. This stock
Eric,
is
don't pay any attention to what Bernanke says. Look what he does. He's cutting rates by 75 basis points. He knows we're already in recession, or he wouldn't be doing that.
Gary Kaltbaum?
My biggest issue is that's a lot of short-term talk, which will get a lot of people in trouble. In my study of bear markets, they don't just end like this.
Peter,
end legs like this, and bear markets die a slow death.
Stocks are cheap, Gary.
Is Ben Bernanke, Peter, is he lying? I mean, he said a week ago we're not in a recession. Are he and Hank Paulson, do they know something we don't? I've asked this time and time again that they're just not.
They don't know anything we know, They know what we know. We're in a recession. They know it as well as I do. If you just look at the signs, this economy is a mess.
But they said they're not forecasting one.
Hold on. Paulson came out and said the fundamentals of our economy are sound. Look at the fundamentals. You've got millions of Americans with mortgages they can't afford that are about to reset higher. Home prices are collapsing. Inflation is running out of control. People are losing their jobs. We have no savings.
I get
we
that,
owe
but
the world
is the
trillions.
government lying? Are they lying?
This is the worst. Yes, this is the worst economy I've ever experienced.
And
the
a fully
fundamentals are a
employed
mess.
economy, and a fully employed economy with corporate earnings that are solid and cash in corporate coffers. It's not that bad.
Our biggest financial institutions are teetering on bankruptcy. They're going hat in hand to countries around the world just to keep themselves solvent. This is a disaster in the making.
Victoria, before we all put a bullet in our brain listening to the pessimism of Peter, we have to keep a couple of things in mind. One, we are a computerized economy now that is very different. We have so much more productivity than we used to. Also, now we have just-in-time inventory. Recessions used to be caused by these huge buildup of inventory that just sat around for months and months without being sold. Now we have just-in-time inventory, so there's a lot less than there used to be.
And our exports are thriving. That's the upside of a weak
record
dollar.
trade deficit.
But
we got a
that doesn't, I don't think that matters, Peter. Look,
yeah, of course it matters.
The Fed isn't saying we're in a recession at this point. They're trying to read the tea leaves just like we are. But they're also leaving the door open to future rate cuts, which shows that they're concerned about where the economy is going.
Well, I would, for the record, by the way, I would just like to assume that Ben Bernanke is not barefaced lying in front of the camera when he says he may be wrong, Peter, he may be right.